Well, good morning, everyone. Welcome to our Tuesday morning trading session. I trust everyone managed all right yesterday. Looks like the market put in a fairly steady rally yesterday. Just looking back here at yesterday's trading, not overly active, but we got a few buy signals and the market just kept plodding higher. A nice day to trade, one without a lot of whipsaws. Trading left off near the highs, the overnight very quiet, and now we're opening with just a little bit of an opening gap. We'll see whether traders try to fill that gap this morning. Should probably give them a few minutes to settle in. If you're one of these traders that likes to take the first in sync signal, well, we've got a few here. We've got a couple on the Falcon. We've got one here on the Raptor as well. The Raptor working on an early trend change signal or cloud crossover. That's the #1 signal. Clouds haven't crossed completely yet, so it's not official, but it is very close. And a possible 4-arrow consolidation here on the Hawk. Not the bear flag type formation, but this one's going a little bit sideways, still qualifies. And now we're into yellow bars. Now the 4-arrow consolidation is a signal I will take off of a yellow bar. And now we're into a possible green bar sell. So we might see just a little bit here of a retest of the extreme. It's possible the market may turn from here and try to head higher. So the signal printed right here. We should be able to get our scalp target out of that, and there you go. The Falcon flip-flopping a little bit now. The trend line flipping over somewhat. The Hawk actually now, it was producing a first micro-macro cross. Now that we're past the 4-arrow consolidation, I really wouldn't be all that keen on taking a signal on a yellow bar. We'll see if we get another failure here. What I mean by that is the market attempting to recover the lows, to recover the downtrend, and then swing higher. That could make for an interesting buying opportunity. Really quite neutral. Look at all these yellow bars that are cropping up. Back down to the lows now. Ooh, there's a breakout. Steve says, so many great buy signals yesterday. Sometimes, when you've had a good rally day, you need to take a little extra caution the day after because the market doesn't seem to have the follow-through it used to. Used to be if there was a rally day higher or lower, you could count on at least a couple of days. But now it seems you get a rally day, then you get a couple of sideways days. A rally day, a couple sideways days. Or perhaps I should say days with a little less follow-through. All right. Yeah, we've been sitting here about 5-6 minutes now. This is usually the time of the day where we get our signal, our first signal. And here it is. We're getting a crossover sell signal. Also a late filter entry on the Falcon. So the late filter entry occurs when the filter goes out of sync, comes back into sync. The trend line never changes color, and we've printed this signal to sell. This is the same signal as what we're looking at on the Raptor, and you can do the exact same trade here for you Falcon traders. All right, looks like they may try to head lower here. Kind of bouncing around a little bit. Another macro pullback slash 4-arrow consolidation here on the hawk. So a few things lining up to the short side. Okay, so we're short both the, let's see, what time is it? 6:39. Well, it looks like they're going to make us try to ride out a swing here. So back into the hard edge now on the Raptor. And of course, whenever we encounter the hard edge, we anticipate some sort of reaction. You may also interpret this as a double pullback signal. I wonder if it was close enough that the programming is going to produce a number 3 signal here. I can probably get a little bit more serious about bringing my stops down. This is the second attempt to move the market lower, so I think we'll go to a slightly more aggressive stop strategy. Bring those stops in a little bit. If they fail at this point, they're very likely to make a run at the highs, so I'll just hold my stops here for now at this last swing high. You could even move it to the other side of the primary support line. That would be okay. So I think what's going on is we've got a little bit of trend line action going on. We got traders trying to short it on the trend line, and if I draw a trend line below here, bet you dollars to donuts, we've got some buying going on near the lows. Come on, we're not asking a lot. Darn it, swinging a little higher, not what I wanted to see. Oh, now we're getting a soft edge buy too, so sellers got to step up here if they're going to knock the buyers, or sellers need to step up if they're going to knock the buyers down. It's kind of the line in the sand moment. No, come on. Looking for that hard edge to hold. No, get away. They're going to tag me here. I don't feel much like holding the stops back to the original place up here above the median line. That would give me a little bit more staying power. I'll take the early stop out if they don't reach my profit target. So the Geiger counter giving me a little bit of hope. It was pulling here to the short side and holding. Oh, see, like that. That's encouraging, but if we don't get some follow through from that pretty quick, I think we're going to see the market give us a little bit of an uptick. Well, you can see there came all that selling through the market. No, no, I didn't think it would hold. Well, that's all right. It was a good trade. It was a good try. Didn't really do anything wrong there. It was just one of those things. Now that we're back a little deeper into the hard edge, we're getting another reaction. You can see that spike of buying that came through. That was the one that took me out. Floyd's watching the mid cap and the Russell. He says we got a nice move on both the mid cap and the Russell, both good markets. All right, so are they going to try to rally from this now? Were you getting a first micro macro cross higher? Possible. Well, we did get a kind of an early trend change signal here on the Falcon. Excuse me. Crude oil prices might be trying to rally. What I'm watching here on the, Francisco's just asking, what about a bracket on crude oil? I'm watching crude oil it's kind of flinching off of the secondary support line, holding the lows. I would love to see a number 2 signal print here. That's the counter trend signal, of course. We've had a little bit of a downtrend. We've had it tested the extreme. You could bracket it, as Francisco's suggesting. You could just bracket this range, buy a break above, sell a break below. I'm thinking that might not be a bad plan, Francisco. So the way you would do that is you would use your OCO order. Now you need to remember your OCO orders are live when you put them on your chart. You don't use the trade manager to place your OCO order. Rather, you right-click on the chart, and then you can select your buy stop. Here we'll use the buy limit because it is crude, and your sell stop limit. Now, when you place these orders, like I said, they're live. So what I tend to do is I tend to place them away, and then I'll bring them in to where I want them to be. So there you go. There's a little bracket trade that you can have on crude oil. Remember, if you have your stop strategy enabled, it will automatically give you a stop. Now notice how my ATR stop is right at my entry point, or just a tick below my entry point. What can happen here is it can actually fool the programming. And what I mean by that is it will engage your order. The trade manager will still read your stop up here instead of flipping it down here. And you could get tagged at break even, or maybe even for a tick profit or loss. So the best thing to do is to either select a different stop strategy, something that's a little bit further away from your entry, or just turn your stops off for the moment, because if you do get a fill, the crude oil is not exactly screaming higher or lower this morning. You should get an opportunity to re-enter, or pardon me, enter your stop. Elmer says he had some problem using an OCO order on a live trade. He said it didn't work. There's not really a video for the OCO order specifically, Elmer, but what happened? Did the OCO order not fill, or did it fill and disappear? Yeah, Elmer says in and out in a second. The only time I can say that happens is if, like I pointed out here, your stop strategy is right near your entry. Now, I have had it happen occasionally. Like you said, you get into a trade and it immediately stops you out. You may want to send Ben an email. I mentioned that to them. It doesn't happen often, but every once in a while, it does that. Elmer says I had a fixed 10-tick stop enabled. Send an email to Ben. He may ask you for what's called a trace file, and that will help him track what was going on with the software. Well, the NASDAQ on a little bit of a upswing here. back near the highs of the morning. Remember as well with that little crude oil channel that we just looked at. So here's the little crude oil channel that we have. Whenever the market is stuck in a sideways range, yes, you can trade the breakout, but remember that most breakouts fail. If you didn't know this already, the vast majority of breakouts fail. It's like 75% of breakouts will reverse. Now, that doesn't mean they'll make a full reversal, but it's to be anticipated. That's why a trading friend of mine always used to say, never trust a breakout. Rather, if you want the safer play, you can let the market break from this range, look for the retest, and then look for your buying opportunity, evidence that the market is going to try to continue higher. Likewise, to the short side, it should break, it should retest, and you should get another sell signal to confirm that the market is actually staying outside of this trading range. You see it happened here. We had a little bit of a sideways range. The market breaks, retests, comes back, and then we produce the soft edge sell signal. In fact, you had a couple of opportunities to get into that after the breakout from the range. If you didn't consider that the range and you considered that the range, well, you still had the breakout, the retest, and the signal. Yes, there will be times the market will break out of your trading range and not look back. It will just keep on going. So what? You know, there's always another trade. The objective here is to find yourself on the right side of the trading equation and not just take a trade for trade's sake. So a little something to bear in mind when you're trying those bracket type orders. Be prepared that the vast majority of them, about 3/4 of them, are going to fail. Now the upshot is that you can normally keep your risk reasonably tight on that type of trade. So that's your trade-off. You're trading off the lower probability trade for less risk. And really that's how trading works, right? Sometimes we take the higher probability or the higher probability signal, but it requires more risk from us, and other times we'll take the lower probability signal and but we can get by with fewer dollars, if that makes sense. All right. Well, the hawk actually producing pretty good today. We got a couple short signals. Now we've produced a couple of buy signals. I may have to pay a little bit more attention to the hawk here. The Falcon gave us a trend change signal. And we'll see here whether the Raptor is going to give us a cloud crossover signal. Francisco says there was an update sent out a few days ago, software update. That was from Indicator Warehouse, was it? Oh, okay. Yeah, Francisco says, yeah, that was from Indicator Warehouse. Okay, so we got the buyers and sellers kind of evenly balanced. You can see we've drifted back toward the high of the morning. Might get a little bit of a pullback here to confirm the cloud crossover. I see. Francisco says some of the update was for Ninja 7, but most on Ninja 8. Yes, I do believe that they have almost all the software reprogrammed for Ninja 8 now. I think there's one or two programs still outstanding. Okay, here's a little bit of a pullback coming our way. Tiny pullback. I was thinking it might get to the hard edge, but maybe not. The Geiger counter showing them loading up a little bit here to the buy side. Yeah, Francisco says take a look at crude oil. Crude oil breaking out of that little sideways range that we were watching. Also producing a cloud crossover signal. So a couple of things here in favor of crude heading a little bit lower. See, here's the breakout. Now we're seeing the retest. If they come back here with another bar to sell, you could treat this current bar as your entry bar. It's a second push entry opportunity. Right? So if that bar finishes bullish, then we're witnessing the retest of the breakout. And then, of course, any break of that low would suggest that, yeah, the sellers have control of the market, and that would be a good place to enter. Well, there's arrow number 3 in a possible 4-arrow consolidation. If you wanted to be a little bit more liberal on the formation, you could interpret this signal that didn't trigger as a signal as well, in which case you would now have your 4th arrow. So you would have a completed 4-arrow consolidation, but I'm going to hold on, see if I can't get or are they just going to push on through that? Yeah, Francisco says lots of signals on the hawk, but again, we try to focus on the high probability signals. We don't just take signals because there's a signal printing. Is every signal valid? Yes. Is every signal a high probability signal? No. If you want to focus on your high probability signals, well, then we're going to look at, and if you don't have this already, I'm doing this for the benefit of those new people in the room, but we have what we call the cheat sheet. So here's like the hawk cheat sheet. It highlights the 5 highest probability signals on the hawk. Note there are other signals printing. Note that many of these signals hit their profit objective. Some don't. But if we focus on the highest probability signals, we'll probably do okay. So that means we're going to look at things like a first micro macro cross signal, or a 4-arrow consolidation signal, or a macro pullback signal, which is also right there. Here's another 4-arrow consolidation that we looked at earlier. Here's a first micro macro cross lower. Some of these other signals, however, even though they worked out, are not high probability signals. No, where are you? Drawing tools there. Signals like this one. Signals like this one. You know, there are signals like this one, or these. Well, actually, this one did work out, didn't it? These are all valid signals, but they're not high probability signals. There's a chance they'll work out, yes, but like I said before, the way to make money trading consistently is not by trading more often. In fact, I think trading more often is actually a huge deterrent to making money consistently. Because every time you dip your toe in the water, there's a chance that the market's going to turn around and give you a spank. So rather, if you hold out for those high probability opportunities and then capitalize on them the best that you can given your account, and then restrict how many times a day you trade, I think in the long run, you'll probably do much better. We're kind of stuck here this morning, though. The NASDAQ trying to head lower, trying to head higher, not really successful one way or the other. Yeah, like Mark says, I use the sniper analogy. Be patient and wait for the best opportunities and then load up. And that's exactly what a sniper does, right? If you're a sniper in a war zone, you don't shoot at everything that moves. You shoot at whatever you're very sure you can kill. Otherwise, you just sit there and you let the armies roll by. And trading, you know, there's a lot of times you hear the war analogy in trading, and it's for good reason. It's a war of a different genre. We're doing it with money instead of bullets. All right, they're not giving me a whole lot of follow through here to the top side. They broke the high of the morning and hit the median line right on the bean. Let's put that back on the shelf for now. Here, hold on a second, Francisco. I will find out for you. Francisco's asking, what is a typical range for the Canadian dollar? So let me build a Canadian dollar chart here for you. And I will tell you. Here, I'll just, you know what, I'll just build like a 15-minute chart for convenience sake. And what I'm going to do is I will put on, well, let's make sure we have the right data. So 24/7, no thank you. We want, well, unless you're going to be trading the 24-hour session. I want the currency. All right, well, we'll leave it on the 24-hour session. What I was going to show you is the day ranger. We'll throw the day ranger on here, and that will tell us what the average ranges are. Oh, need a little bit more data. So, Francisco, you're right. Francisco says the range looks a little bit small for the Canadian dollar. You are correct. So it looks like the average 30-day range has been around 53 ticks, 10-day range around 57. So those are, close enough to each other. But the 5-day range has shrunk considerably. It's only around 44 ticks. Yesterday's range 41, today only 35. So you're right. The range does seem to be shrinking a bit in the Canadian dollar. So right now, your average daily range sitting around 40 to 45 ticks for the CD. Okay, so here come the buyers again. We're going to produce another late filter entry signal here on the Falcon. In fact, I can get ready for that. I can anticipate. There it is. So, oh shoot, they jumped past me. Let's try that again. Or I could just pop in with a buy order, and here on the Raptor, we should be producing a cloud crossover, or yes, pardon me, a cloud crossover signal. Ooh, the Raptor not totally in sync with the Falcon. That's rare, but it can happen. There's the crossover signal. Here on the Hawk again, I looked away for a moment there, but we got a proper 4-arrow consolidation combined with a macro pullback. So the Hawk giving us another opportunity on the long side. The Eagle also coming through here now with the trend change signal. The clouds crossed, and this is the first signal with the new trend. Can I cover that? Oh, I can. So lots of opportunities on the buy side. I don't know, that's a bit of an ambitious target to rally back up to yesterday's high. I may have to adjust that if we get filled. Andrew says, I don't have the bid and ask in my trade manager. Trade manager, nothing has changed on it, but it did get a facelift. So your trade manager may look a little bit different than this one. Email Ben, and he will get you the link to the new trade manager. And here I'm assuming everybody knows Ben's email. I'll put it in the window here. Okay, just bear with me a moment here while I make a couple notes in my journal about this Falcon trade. There you go. Mark says you can also download it from the members area at the Indicator Warehouse dashboard. It's now up to version 6.1.4. Yeah, Francisco says, looks like that crude oil breakout was a fake out, and that's the issue, right, with those breakout trades. Now, it's not a lost cause yet because your stop should be above the top end of the channel, but that is a fairly deep retracement for a market that's intending to head lower. Never trust a breakout. I can't tell you how many times my friend said that to me. It took me a while to believe him. I'm a little bit of a slow learner at times, but he was right. You can never trust a breakout. All right, so we're loading up here a little bit on the buy side, near the highs of the day, and we'll see whether the buyers can actually push on through. There's a little bit of an uptick. If you're not keeping a trading journal, I heartily recommend that you start one. It doesn't need to be anything fancy, just a spiral notebook will do. And you should record not only the entry and exit numbers, and as well as your profit and loss, but why you took the trade in the first place, which is probably the more important of the two. And you'll probably find if you can find two reasons for taking a trade, you'll probably find yourself on the right side of the trade more often than not. So we've got a breakout now that is really, really struggling, and that's a little bit of a concern. Thinking about bringing my stops up really tight here, maybe even to the hard edge. Now I'm being a little bit more aggressive with my stops than I normally do. But usually I try to give the market every opportunity. But I think that's all I'm going to give them on this one. It's the sideways nature of the market. It's like I said, these breakouts, right? The vast majority of breakouts fail. Well, it's not just sideways channels. A breakout at the high of the day, and now all of a sudden the market is not so sure it wants to go any higher. Yeah, Francisco says we got another breakout on crude oil. Now we've broken to the upside. So here's our new sideways trading range. There's the upside breakout. Here comes the retest. We'll see whether they can stay out this time. If they can, we will produce a buy signal. Now here's where sometimes, you know, the high probability signals don't necessarily sync up with your numbered signals. We have all the elements of a high probability trade, right? We know what's going to happen. We've had the breakout. We're looking at a retest. If I get a buy signal here now, it does not have to be a number 1 or a number 2 or a number 3. It will have confirmed what I suspected, that the market broke out of the trading range and that it's trying to stay out of the trading range. So if I produce a buy signal here, then that will be enough for me. Oh, how do you like that? I even rhyme. Things could be getting noisy here in a moment. We've got a little bit of a water leak issue here, and there's going to be some heavy equipment rolling in soon. So I'll try to remember to mute the microphone, but if you hear the rumble of trucks and tractors, that's what's going on. Well, it looks like they're going to give me a tag here. But I'm fairly confident if they hit 59.21 75, they're going to slip the extra 5 points and tag me at 59.17, where my original stop was. Okay, so back now to crude oil. We've come back, we're retesting, and look, we have a warning dot for a buy signal. So if crude rallies from here now and produces that buy signal, that would be a buy signal that I would be prepared to try. It's got a little ways to go. It's going to get up to 49.31 before it will possibly print a signal for us. Okay, just looking. It's almost going to be time to adjust my stops on the NASDAQ trade. Would try to take advantage of any rally to get the stops to a break even or even a small profit. Come on, crude. Well, they're wanting to, but they're sure taking their time getting there. Okay, well, let's see here. Hooray. Hooray for us. So we hit our profit objectives on those. And, uh-oh. That's the problem when you've got so much software on the go. Oh, there we go. Okay. I was afraid it was going to lock up there for a second. All right, we're not to the break even yet. We are back near the overnight highs. I'm going to run a much more aggressive stop. Much more aggressive stop. I'm going to try to take some profit out of this trade. All right, well, they're starting to turn over here a little bit. I may end up getting stopped a little bit early. But like I said, we're near the overnight highs, and it's summertime. It's just that kind of day. I'm not sure we're going to see the market take out yesterday's highs, so I will take my profit when I have it. Thank you very much. Well, I'm giving this trade every opportunity, but really I'm tempted. Um, if it shows me 80 bucks, I'm going to grab it. Showed 75 a couple of times. It's stuck here at 70. 75, come on, give me 80. Come on. You can, there it is. All right. I'm okay with that. You know, the market is struggling a little bit here. It may well go up to the high of the morning, but I'm okay taking my profit where I did. So long as you have a reason for doing something and you're not just trading off the cuff, I think that's an important thing to remember as well. You know, they say always have a trading plan. You're allowed to modify your plan, by the way, depending on what the market conditions happen to be. Well, and there they go. They are going to try to hit yesterday's highs. Look at that. I didn't think they had it in them. Well, they're big press there, all the way to the primary resistance line. Okay, now that they're up at the primary resistance, oh, they would, what's the high here? They wouldn't have hit my profit target, 59.37. My profit objective was 59.38 half, so I did leave a few dollars on the table to be sure, but still not a bad trade. Now that we're into the primary resistance, I don't know if we're going to see the market attempt a pullback. We've been rallying, well, certainly for the last half hour. No, actually for the last hour. It looks like the rally kind of took hold at around 6:45 Pacific, 9:45 Eastern. And here we are an hour later. That's a long time to be pushing the market one direction. We'll see whether there's a little bit of a break in the action. Let's see, has crude oil done anything yet? Oh, we're getting warmer. Crude oil just about to print a buy signal. Let's see, can I afford it down to here? No, of course not. I'd have to play this relatively tight. Let's go with the parabolic stops. Can I do that? Yes. So there's a crude oil trade that may have some follow through to it. If you'll excuse me here for just a few moments, they're about to shut our water off. And I need to fill up a couple of things. Actually, you know what, gang? The market's probably going to spend a little time consolidating, so if you forgive me, we'll just close down the room a few minutes early here today. You can anticipate a little bit of a pullback, something to the hard edge, and that's going to be the big test for the market to try to continue higher. So you should get a hard edge bounce signal. We might even get a counter trend signal here. That's the number 2 signal. That would be worth trying. We're back up to the primary resistance as well as yesterday's highs. This is where the market fell off before, so it's reasonable to assume that they could do it again. So keep a lookout for a number 2 signal and possibly a hard edge bounce as well. All right, I will see you tomorrow morning. We will talk to you then. Bye for now.